Hello and welcome back to our Cannabis monthly video update. For the Investing News Network, I'm Bryan Mc Govern. This month, investors are preparing for a critical vote on one of the most important cannabis deals announced so far. Also in California, a new bill could see the creation of state-chartered banks, a big relief for businesses in the state. One of the biggest roadblocks still affecting the marijuana industry in the US is the lack of banking support, and this is because of the federal illegality. California is trying to change that with a new proposed bill that would see the creation of state-chartered cannabis banks, meaning that financial institutions can apply to the state and become cannabis banks and offer services to marijuana companies. In May, the California Senate voted in favor of Bill 51, which, if approved and signed into law by the governor, would see the creation of two new state agencies to monitor and regulate the creation of these banks. Mark Desso, a cannabis lawyer, told us that he hopes other states will follow suit in the advancement from California. However, another lawyer, Robert Selna, told CNBC that while the change is welcome, this can only really offer a mild option for cannabis businesses. Selna said, quote, "It will help cannabis companies pay the rent, but how it corresponds with federal law is still a question. The entry of established banks in the US cannabis market still seems far away. However, this bill may offer some relief for some of the state companies." After confirming an agreement, Canopy Growth and Acreage Holdings are now trying to make sure that investors are seeing the deal from their perspective. The market has started to see some clashing reactions regarding the big blockbuster deal. Investment firm Mercado Capital Management, which claims to own 2.7% of Acreage Holdings, announced that they would be voting against the deal, even calling it a value-destructive transaction. Despite this initial reservation, another investment group announced their support for the acquisition. MarketWatch reported Matt Hawkins, managing partner with Cresco Capital Partners, issued a letter to investors saying that he would support the acquisition. Hawkins sees the acquisition as a way for Acreage to go back into the market and continue its merger and acquisition strategy. The Acreage shareholder meeting, which is set to determine the vote, is going to take place in June. Acreage will need a 66 2/3% of investors to vote in favor for the deal to go through. Meanwhile, Canopy investors have a deadline of June 17 to issue their votes. And that's it for us this month. Don't forget to subscribe to our YouTube page as we will be covering the Lift Expo in Toronto. That means more interviews and more videos with executives, experts, and other panelists at the show. As always, don't forget to follow us on Facebook, Twitter, and LinkedIn. See you next month.